coming. Oh, hiya. You alright, son? What are you after? I'm just looking for some tax advice, really, and how to structure myself. I'm in the FX industry. Yeah. Just do us a favour, mate. Yeah, sit down now. I'll just get some paperwork. I'll be right with you. All right?
The asset is in place. I repeat, the asset is in place.
FX Smasher, mate. How you doing? Yeah, you all right? Nice to meet you, FX Smasher. How you doing, man? Yeah, so I'm just after some advice, really, on my taxes and how to structure things. So I was told you're the guy. I'm a busy man, yeah, you get me? Basically, like, with the taxes and that, mate, like, look, for the first couple of years, just, do you know what I mean? I won't worry about it, man. Oh, you're telling me to avoid tax? No, you're getting, I want to pay it, but I want to understand how to in the best way, you know? Yeah, well, you know, that's the best advice I can give, man. Like, it's 100 quid, that's. No, you're not understanding. I don't want to avoid it, mate. I don't care what you've told people, but I need to do it legally. I know what I'm on about. Yeah? Why are you telling people this advice? Why are you giving this advice? Do you do this to all your clients? Because I'm feeling quite uncomfortable.
Move, all units, move.
Freeze! You're under arrest. Get down on the ground, hands behind your head. Whoa, bro. Did you call these guys? Get your hands behind your head now. Move it.
Wait, what? No, allow it, man. Look, listen, yeah. Like, I promise, I wasn't giving that advice, man. I was joking with the guy. Like, listen, allow it, man. I don't want to go to jail, brother. Please allow it, man. I swear down. I was just joking, man.
What's going on, YouTube family? How are we doing? I hope you've all had an incredible week. Welcome back to another video on the channel. If you're not subscribed, you know what to do. Hit the button. So today I wanted to answer a question that I get asked a hell of a lot on Instagram and DMs, wherever it may be, is do I have to pay tax on FTMO profits or any prop firm profits? If so, how do I go about that? How do I look into that? Bloody blah, right? So first of all, I just want to start off by saying I'm not a tax professional. I'm not an accountant in any way, shape or form. So you should always seek professional advice. Having said that, I would like to share my experiences and what I do, and hopefully that can help someone. Again, when you're starting out, you may not want to expense an accountant straight away, and there are other ways you can do things which are of course legal and will help you out. So do I have to pay tax on FTMO profits? The answer is quite frankly yes. Essentially, you are giving a service or offering a service of consulting to FTMO or any other prop firm. They are giving you an account which you are trading on. So it's not like personal account where it's your own money that you're putting up, and that can come under a different bracket. We get into that in a different video perhaps. But FTMO, essentially, you are providing a service just like if you were a gardener, a window cleaner, a builder, you were making OnlyFans content, whatever it is, you're providing a service, therefore you fall under the income tax bracket. Just want to say as well that this is for the UK. I know there will be similarities around the world in different places such as Australia and America and wherever else. There will be similarities. And I know everyone runs on different percentages at different points and different thresholds. Obviously, I can only speak on the UK. I will also quickly throw in that I did look at actually migrating myself out to Dubai in terms of setting up a business out there. I know that's where a hell of a lot of people go. A lot of digital nomads are going out there. I spoke to a company out in Dubai that specialise in doing this. And you can do that 100%. Dubai is tax-free. You know, when you look at the costs, it is pretty much like living in London. But at the same time, of course, not paying tax would be great. But if you live in the UK and you reside in the UK for more than 90 days, 90, you are liable to pay tax in the UK. So bear that in mind. If you were to just go out there, set up a business, come back, you'll think you're not paying tax, but because you've lived in the UK for longer than 90 days, you're going to be liable for tax. So it kind of defeats the point. Obviously for me with a family and stuff, I can't just jet off for 9 months of the year and only be present for 3. It doesn't work for my lifestyle. Also, Bali recently has looked to introduce, I'm not sure if it's out yet, the digital nomad visa, where essentially as long as you're earning an income from outside of Bali, basically again, digital nomad, you can have 5 years tax free. I know a few people I know have been looking into that and it does sound great. And again, Bali is a much cheaper place to reside and live. You could live off sort of $1,000, $1,500 a month and live a much better lifestyle as opposed to Dubai where you're going to need a much more larger quantity of money. And again, if you're just starting out, the last thing you're going to do is just flock off somewhere. There are other places in the world where of course the tax is a little bit different. There's lower thresholds, there's different rules. Obviously you've got Monaco, but I believe you have to have a certain amount of money to get residency there and whatever else. If you're single or if you are in a relationship and you're both interested in, you know, moving your lives or jetting off and traveling, then of course Bali, Dubai would be perfect. Again, Dubai, you could set up shop there and then you could travel the world. It'd be great. Just bear in mind, like I say, if you want to actually physically live in England still, it can't be done. I spoke to many different people on the topic, and yeah, if you spend 91 days or more here, you're done for. They're going to charge you tax, so even though you might be sitting somewhere sipping sangria on the beach, HMRC want to cut and they want it now. So the main thing with FTMO is it is very different to a personal account because you're essentially using somebody else's money to trade. Having said that, you receive 80% of the profits, they take 20% of the profits, so you'll be taxed on the 80% that you receive. So you're taxed after the split on what you actually take, not on what you make. Remember that, they take their cut, you get your cut. So you'll be taxed on the 80%. Essentially, you'll invoice FTMO either fortnightly or monthly, depending on how you structure your payouts, how consistently you get your payouts. But bear in mind, they have an invoicing system which you can use, it's free to use, or you can of course generate your own. So you essentially have two options when looking at doing this. You have sole trader and you have limited company. There are benefits to both. I figure that most people that will be starting out will also be looking to get in as a sole trader because whether you're running it as a side hustle or whether it's your fault you're going full time, you may not have the expenditure to spend on an accountant and a limited company. There is more to do and manage in a limited company, so it will cost a little bit more to manage from an accountant perspective. If you're using FTMO as an additional income or even your main income, the first thing you need to do is you need to go on the Gov website. You need to register yourself for self-assessment. It's really important that you do this. It's very simple, very easy. You just fill out a form. They'll send you a letter. You usually will get a UTR number, which is your unique taxpayer reference. And from that, you'll obviously be able to do your tax returns and everything like that. If you don't do this and you try and snide it or you try and sneak away from it, trust me, they can catch up with you, and if they do, they'll likely knock on the door with a hefty fine, and it's just aggro from the beginning. So I'm going to structure this into two examples. Essentially, you got the example of you're still currently in a paid job, you're employed, and you're looking to run FTMO or any prop firm as a side hustle or extra income. And then I'm going to structure it as option two, where you're fully all in with trading, you don't have any other income, and trading's your main focus. We'll run through both of them and we'll just run through how things would work out across a year. So I'm going to pop up on the screen here just so you can see the UK tax thresholds, so you have an idea of what they are. So your first 12,500 is tax free. Anything over that, up until 50k, is taxed at 20%. And then 50k to 150k is taxed at 40%, and then anything over 150k is taxed at 45%. Let's say your normal job pays you £35,000 per year, and you've made 65,000 with FTMO profits once you've invoiced them and withdrawn the money. You've already earned 35,000 in your normal job, which leaves you with 15,000 left in the threshold up to 50k before you're liable to pay 40% on profits. So the 15k of your FTMO earnings will be taxed at the basic rate of 20%. So you'll be paying £4,000 on that 15,000. The remaining 50k left of the 65 will be taxed at the higher rate of 40%, which will mean you'll pay £20,000 in tax. So overall, that will be £24,000 in income tax that you owe on the profits from FTMO. This will leave you with around £41,000 in profit. You then have to take into account national insurance. Again, I will pop national insurance up on the screen so you can get an idea. But essentially, you'll be paying around £4,200 in national insurance, which is going to leave you with around £37,000, which is pure profit, which is all yours. So you've gone full-time in trading, you're all in, you have no other income, you have no other job, it's just you in trading. So the way you'd structure it is you have your first 12,500, which would be completely tax-free, and then you have anything from the 12,500 to the 50,000, which you would pay 20% tax on. In this case, that would be 37,500, which you would pay 20% tax on, which I believe is in the realms of 6,500. After paying that, you would then have £15,000 left from the initial 65,000, which would be taxed at 40%, which would then be £6,000 taken out of that towards tax, which then leaves you the grand total of £13,500 in tax, which you would pay on that overall £65,000 profit split. You then of course have national insurance again, which is going to be very similar to previous, which is going to be around 4,000. So that's going to leave you in somewhere in the region of 17,000, 18,000 to pay out in taxes, which is going to leave you with around £47,500 roughly, which is yours and you can do as you please with. You can expense things against your taxes. So for example, if you're a trader, you can expense things such as your desk, anything on your desk, your computer, your laptop, iPads, phone. You can even look into paying, if you're the main holder of Wi-Fi, your office space, whatever it is, you can offset that against tax. You can completely do that. It's completely legal to do that. Again, seeking advice from an accountant always helps. But also you can get a thing called QuickBooks, which is what I've used previously, where you simply put in all your receipts, you put in anything you spend that you feel is a write-off, and you offset that against your final tax bill, which you'll receive. It also works out what your tax bill will be based on the income that you've had and then based on the expenses that have gone out. It takes into account the 12,500 threshold. It changes based on thresholds. So it's really important that you do have something like that because again, working this all out yourself could be a little bit of a nightmare. I know that these numbers can fly around pretty quickly. It can go straight over your head. You think you've got enough tax and then you haven't, and you're like, oh my God, what do I do? So that's a really good way to look at things. Again, another thing I would suggest is setting up a separate account for your invoices to be paid to. If you have one bank account where you pay out for all things for your own bills, and then you're trying to work out what's personal, what's business, working out what you can offset, what you can't offset, it just makes for a lot more work. Whereas if you have a separate account, the FTMO payouts go in, you then pay yourself out of those payouts, leaving tax in that account, and then using that money to offset if you need to buy something for work, such as cameras, lighting, whatever it may be. This of course goes against any profession, whatever it is you're doing. You can buy equipment in your field, but if you're someone that's trying to get a private jet, bottles in the club, and stick it on and say, here, Mr. Taxman, you can pay for it, you're going to get found out pretty quick, and they're not going to have it. They're not going to play ball. The app might allow you to offset it, but when it comes to sending that document off or giving it to your accountant, they're going to look at it and go, bro, you can't really offset a private jet to Ibiza and bottles in the club at Oceana as a write-off. You didn't really do anything, so it's not worth trying. Again, like I say, a good accountant will be able to help you save money, and they will give you the best tips and tricks legally that can advise you on where you can put your money, what you can do with your money, and if you need to spend some money to perhaps lower your tax bill. Like I said at the beginning of the video, you know, tax is important. It's something that we have to take on board. We can't just avoid it as much as you might want to, or feel that energy and that drive to, oh, I'm going to avoid it, no one's going to know. Eventually they'll catch up. You might get away with it for a few years, but they will come knocking, saw what happened. It's not ideal, and it will only sting you later on down the line when you're probably not expecting it, and it will catch you when you're off guard. The beauty of QuickBooks is you can download the file when it comes to doing your tax return, and you can either upload that file yourself directly to HMRC, or you can give it to your accountant and they can use that to fill out your tax return for you. It will have everything in there from what you earn to what you offset, the final tax amount, how much you earned, and what you need to pay. So it's really handy. I think it's like £11 a month. This isn't sponsored by them or anything, but if you're watching QuickBooks, hit me up. And yeah, that about sums it up. Hopefully there's been some education in here. This may be things that you already know, but it's been a question that I keep getting asked, so I just figured let's do a video on it. Hopefully it helps someone. Like I said, I'm not a tax professional, but I have educated myself on this. I believe we should have education on it to some degree. It's important to know. If you like this video, as always, please do me a favor, hit the subscribe button, give it a thumbs up, and I will catch you all in a bit. Have an incredible week. Peace and love, gang.